In the news this week, we'll find out what's happening with retail sales, manufacturing, housing, and more. Here's what to expect. Before we begin, remember to like this video and subscribe for more economic updates. Among the more prominent pieces of data we'll be watching this week is the retail sales report for September, which will be released Thursday by the Census Bureau. The consensus estimate says retail spending increased at a monthly rate of 0.3 of a percentage point in September, which would follow a gain of 0.1 of a point in August. Excluding auto sales, sales are expected to have climbed 0.1 of a point last month, which would match the rate in August. A more regional but still widely followed barometer of U.S. economic strength will be released on Tuesday, when the Federal Reserve Bank of New York announces the results of its Empire State Manufacturing Survey for October. The survey's primary metric, the General Business Conditions Index, is expected to come in at a reading of 3.4. That would keep the index above zero and in expansion territory for the second month in a row. However, it also would represent a decline of more than 8 points from where the metric landed last month, suggesting continued uncertainty in manufacturing conditions throughout New York State. Prior to September, the index came in below zero for 9 straight months. Then on Friday, the Census Bureau will check in with its figures for housing starts in September. Economists project that new residential construction came in at a seasonally adjusted annual rate of 1.35 million last month, which would be basically even with where they landed in August. Housing starts have rebounded somewhat from a 4-year low reached in August, but remain modestly below their historical average of 1.43 million. Finally, another key interest rate decision will be made this week by a globally influential central bank that's not the Federal Reserve. On Thursday, the European Central Bank is expected to cut its benchmark interest rate another 0.25 of a percentage point, which would drop rates to 3.25% in the Eurozone. It would mark the third time since June that the ECB has lowered rates by a 0.25 point. What makes this week's anticipated rate reduction across the pond so notable is that just 1 month ago, policymakers there effectively had ruled it out. According to a new report from Bloomberg, ECB officials suddenly have become more concerned with signs of a slowdown in the private sector economy. That's similar to the justification attributed to the Federal Reserve for its half-point rate cut last month. That's all for now. Make sure to join us on Saturday when we give you the rundown of what actually happened. This is Devlin Steele for Augusta Precious Metals, signing out.